Welcome to another episode of Return on Character podcast with me, Dan Cooper, your host, founder of Rock Investments, Return on Character Investments, which allocates capital into the public markets based on character of public company CEOs and teams. I am thrilled to have with me somebody from a sector of the universe that we have not yet interviewed on the topic of character, and that's Ismael Wrixen. Ismael founded a company, and this is going to be fun to get into, called FE International. And what's unique about this company is that I think, at least from what my due diligence, is you founded it so young. I mean, it took a lot of guts. You know, most people come out of this space, they're these institutional M&A firms that claim to own all the space. And to have the courage and the gumption to step out and start a firm in this space, and then not only grow it, guys. I mean, one of the things that's fascinating is it's been claimed that it was the fastest growing company in 2021 to 21 and 20, claimed by the Financial Times. It's as far as I can tell, it's a freak of nature, and I want to hear the story of how you were able to do what you did. And anyway, all to say, welcome to the show. Thanks for showing up.
Thank you for having me. Thank you for having me. Appreciate the kind introduction there too.
Well, tell me. Let's just start with where you're from, where you grew up, and how you ended up doing what you're doing today. Bring us to that point.
Absolutely. So, again, thank you for having me. I love the philosophy, kind of what you've built there, and happy to dive in. If you cannot tell from the accent, originally I'm from the United Kingdom. I grew up near a very small town called Henley, which there's absolutely no reason you should know where Henley is. It's about 30 to 40 minutes west of London. The only reason some people may know it is if you've seen the movie The Social Network. There is a scene in there where there's a rowing regatta, and that is in the town of Henley. So
okay,
claim to rowing heavy. Yeah, so it goes from about 5,000 people to about 50,000 people for 1 week of the year. Everything explodes, and then it goes back to being a very sleepy farm-like town. So yeah, that's where I'm from. But like most people, in England, I then migrated to London. After going to college, where I went to the University of Bath, went to London, did the banking thing for 3, 4, 5 years, Morgan Stanley, Citigroup. And it was at that stage where I decided that it wasn't going to be for me. And not because I didn't like banking. I love the sector. I'm still in the sector today to a certain extent. But it was a very linear growth trajectory. And that was the bit that, got to me. I'm somebody who likes to work 80 plus hours a week. And I started to realize in some of those institutions, they're so large that you become, obviously you're a very small cog in a very, very big wheel.
Right.
But there's
Huge
not much
wheels.
you can do. Yeah. Exactly. And there's not much you can do to push the narrative. You're on a trajectory, and provided you don't get fired, you know when your next promotion is coming, the bare minimum required to do that along the way to kind of get to that point. So for me, that just kind of wasn't what I was necessarily looking for. So I'm very, very fortunate that somebody I went to college with had the guts to actually start a business. So I kind of joined about a year or kind of 2 after that. And then we kind of partnered up and didn't look back. But I think that the bit that we always wanted to do was to help a part of the market that we were considered to be very, and still today, to be very underserved, the kind of lower middle market part, in the technology space specifically, deals kind of below $250 million. These companies don't want to address those type of businesses unless they're on rocket ship growth, which is usually a VC trajectory or path. So I think that's kind of was the ethos. There are thousands, if not tens of thousands of founders out there that have fantastic businesses that also need care, attention, guidance. And nobody was doing that in the space when obviously lots of people do it now, but when we started, that wasn't something that we saw.
And that was 2010, right?
Yeah, 2009, 2010. Yeah, 2009, 2010 is when it's kind of formalized into an actual business. And then from there, and we would define that as kind of first hire outside of ourselves. And then from there, yeah, that's when it starts to grow. So it started
Well,
in London.
you were a young
Yeah.
guy. You were a young guy back then. I mean, you're a young guy
Yeah.
now. I mean, tell us about the first. I mean, it's always these kinds of things are get launched on winning the first customer or winning the first client. Were there any kind of defining moments in the early days that really opened the doors for you guys to be able to get going and put a stake in the ground?
Well, yeah, I mean, quite honestly, when I started in the company, so I'm not I'm one of the founding partners, let's say, but the actual kind of
Right, right.
out of the bedroom with $50, that was my business partner, Thomas. But he, I would say when I joined, the company was doing, web management. So kind of helping people, with hosting and, updating content and little bits like that. And then I kind of realized, well, okay, 90% of our effort is going into that and it's generating about 10% of our revenues. And then I
Mhm.
thought maybe there's, and then obviously on the flip side of that, this kind of brokerage thing that we were doing, at the time, was generating nearly all of our revenues, but was a very, very small focus. So once we started to dig into that and we realized that, that was the demand was there and the need was there, that's when we kind of pivoted the model very, very quickly and then kind of took off. And you're right, it's all about, what do the first customers need and not building a service around them necessarily, but obviously being conscious that all of your efforts is going into serving them with the view that you're going to get the experience and track record to do more over time as well. So we're very grateful to our, a lot of our kind of initial customers, and some of them we still work with today in the sense that some of them started out with very small businesses and they have kind of
Mhm.
taken a stair-stepping approach over time. And we've been fortunate to be able to work with some people across 4, 5, 6 different, acquisitions. And obviously as they acquire, they grow and then they kind of start to go full cycle. They then exit, acquire something larger over time. So that is something that's kind of one of our core principles. It is kind of making sure that we can serve the whole spectrum in terms of what we do. A lot of firms just move up market and start to kind of forget where they came from that perspective. But
Right,
we like
right.
to think that we continue doing.
Well, I mean, it's an unusual thing because especially if you're starting with smaller companies, the fees and the size of the deals are a lot smaller. And when you're getting going, it takes time. Also, I know in the M&A space, it's like nurturing a relationship, right? I mean, it's incredibly relational oriented. You're building trust with the founders of these companies, and they're trusting you to get the best deal that you can for them. And that takes time. The sales cycle can be quite long. And so that's why there's
Yes.
not a lot of M&A startups out there that have been successful. It's pretty impressive that you've been able to do what you've been able to do.
No, I appreciate that. And what we observe, so we've been through a few cycles now. We kind of started during the financial crisis, and then there have been, 2015, another kind of blip, and then obviously, what we're seeing a little bit, the start of at the moment. And what we see is that everybody is an M&A advisor when the market is very, very strong. And then as soon as the market starts to dip, they go off and find the next shiny coin to play with. So yeah, no, you're right. I mean, the cycle is on, but for us as there are more when we started off doing kind of slightly smaller deals, so kind of, 6-figure deals was where we were when we kind of first started the business. There are a lot more kind of 6-figure businesses than there are $6 billion businesses. So there is a large volume to play with there.
Yeah.
So I think at our peak, we were doing about 120 acquisitions a year. So that's a lot of closings on a weekly basis. Now, as we've kind of scaled up to the kind of 8-9 figure space, we're doing closer to, I would say, 40 to 50 a year. But in turn, we've
Wow.
been able to reinvest a lot and build out the team. I mean, we're about 150 people, or so now across all functions. So now we can kind of serve that type of volume, very efficiently and effectively. But I think it also comes down to being very strict to what your core competence of what we do. We deal with technology businesses, we deal with SaaS businesses, digital media
Mhm.
businesses, and some e-commerce businesses as well. So outside of that, we know what our skill set is. If we can
Mhm.
help somebody, we will tell them we can help them. If we can't, we will tell them that we can't. So it's kind of staying disciplined to that, I think, helps. And sometimes that means turning away business, which is, unfortunate, but it means we can do a better job for the people that we know we can serve very, very well.
Yeah. Well, you got an award for the fastest or one of the fastest growing companies in 2021. Now, we all know that is in the heart of COVID. How in the world did you get that title in a period of time, in the world where it seemed like the whole world was shutting down? How did that happen?
Yeah. I mean, obviously, it was a tough period for everybody, and
Yeah,
I think that our company has always so we are definitely an in-office company. I mean, we have offices in London, New York, Miami, and San Francisco. So we are an in-office company, but it just so happened that we were very well set up to transition, you know, to the kind of more remote model, anyway. So from a business disruption perspective, we obviously had challenges like everybody else, but our team was incredibly hardworking and just kind of got on with the task. And I think that in terms of the user behavior and adoption, a lot of the businesses that we serve actually were kind of did reasonably well during that period. So a lot of the
during that
SaaS
time.
businesses that we work with, content, digital media businesses, e-learning platforms, anything e-learning did very, very well in that period. So a lot of our end customers, actually their businesses weren't necessarily, suffering. They were suffering in the sense of, operationally, being able to do business, but the actual demand they were seeing was still very, very strong. So we pivot. I think I'm trying to remember the exact date, but we were very early to kind of move to the work from home. We didn't kind of try and stick it out. I think it was literally as early as February or March 2019 that we said, okay, this is going to happen. I've seen enough people on planes wearing masks now. This is not a joke. This is going to happen. We made that move very quickly, so we didn't have a huge amount of disruption, I would say. But yeah, I mean, I think that it just goes. I mean, we knew the technology move was happening anyway. The move to the cloud was already a kind of trend across most industries.
Yeah,
COVID and the pandemic it kind of shifted that timescale forwards for a lot of people. So our customers did very well, which in turn meant that we were able to continue operating. And the awards and accolades are great, but I think that our company, FE International, founder exits. We are here to help founders exit, and the ability to continue doing that for them was meaningful during that period.
that's awesome. Tell me about a time. Tell me about some event in your life, either professionally or from a business perspective, that really defined, I don't know, a character developing moment, I guess, that informs how you lead your company today. Is there anything that stands out in the early days of launching your firm, or what you think really defines who you are today and how you're trying to take your company forward?
Yeah, I mean, going back, 10 years or so, there are a couple of obviously milestones that kind of become definitive. I think, things like opening your first office or closing your first office. We've closed a number of offices over time as well as we kind of test the market and understand where we want to be and those type of things. I think hiring is always the big one, and hiring is fun, and it's great for team members, but obviously losing people over time, that is a function of business as well. And that hurts because it's a failure of management ultimately. So those are the defining moments in terms of how can you learn from those and make it,
Yeah.
position the business to be able to help people long term. And I think for us, it was understanding because these are people's careers and lives that you're working with. It's not just a paycheck at the end of the day. If somebody
Mhm.
chooses to come to us as opposed to a big institution or a big bank, that is a meaningful decision. So it's having everything in place to make sure that they can thrive in that type of opportunity. And for us, it was also defining who the right people are that we can actually, best work with over time. We are not, being a smaller firm, competing with much larger firms, for competing with the kind of, Jeffries and Baker Tillys of the world and those kind of things.
Right.
We have to be honest with ourselves. And I think that's one thing we've, defined and learned over time is what are we good at? What are we not good at in terms of personnel? We are not the best place in the world. Pound on heart. If you are a graduate, we are not the best place in the world, because we, as a company with 150 people, we may not be the best at training graduates out of school and kind of, pushing them forwards in their careers. But if you're an associate level, so you've done 2-3 years in banking, you're in the position where you're not getting as much deal flow as you necessarily want. You may be in the wrong sector team and you want to get to, 10, 20 deals a year in terms of your experience. We're very, very good at that. So I think part of the milestone that was important early on was understanding what are we good at? What are we not so good at? Where can we help people? Because the better our staff do, the more they can help, our end customers at the end of the day as well. So I think it's kind of, I think as an owner, as a business founder, you kind of need to just be honest with yourself and don't accept it as a point of defeat, more accept it as well. There are, let's say, to run a successful business, it's a cocktail of 20 or 30 different things you can do. You just need to identify the ones that, you can do very, very well and become number one at those things, on a global basis, and everything else will ultimately follow.
In your opinion and your experience, what makes a great M&A broker or leader in the space? Like, I mean, those that have been wildly successful, what do they like? What advice would you give to somebody that's trying to come into your industry? And what do you think of the characteristics and from the human side that makes an M&A associate great?
Yeah, I mean, anybody trying to getting into the space, firstly, come and work with us. But aside from that, I would say tenacity and kind of empathy would be the two key things. And to kind of address those individually, from a tenacity perspective, every deal is going to, die 3 times before it ends up closing. That's pretty much the saying in the space.
True.
And you need to have, very thick skin and the ability to, just look at everything from a very, very rational perspective. Obviously, emotions and other things come into it, but, as to your point, it can be a long process for some businesses, and you need to be kind of willing to stay the course. And, anybody who's looking to, get into M&A, I mean, that is just a feature set of the sector, I would say. And especially if you're looking to do it at volume in the same way that we do, the ability to kind of continue doing it day in and day out. I mean, you have to really love it. It's not something that, as I was kind of touching on earlier, everybody's an M&A advisor when the markets are strong, but, you have to be there willing to stay the course. And we've been doing it, 12-ish years in this particular business, so far, and we'll be doing it for 12 and 24 years to come. So I'd say that's the first thing. And then the second thing, on the kind of, empathy and understanding side of it, I mean, you are ultimately, at the scale that we're talking at here. So let's say, businesses valued between $0 and $250 million. Obviously, this becomes slightly, less relevant as you go up the scale and beyond that. But the type of people that we're dealing with, they may be selling their first business, they may be selling their 5th business, but they're typically, they haven't taken VC money. They are the founder. They may have taken a small seed round or something like that over time, but they are the principal, of their business. This is a life-changing event for them. You have to understand that, and you have to really be willing to take a step back and put their interest first, give them the best possible advice. And sometimes that advice may be, you shouldn't be selling right now, and here's why, and let's work towards a path in the future. So not just kind of chasing the fees, every single time as you go. And I think that our firms are very good. We've been very good at that because we tend to work with people across multiple deals, through their kind of professional lifespan. So it's about giving good advice so that people will come back and work with you on a variety of things as they go, as opposed to, pressuring people to accept a deal that may not be the best thing for them ultimately, which is why we're very cautious about, a lot of firms that kind of just spring up and, overnight success stories and those type of things. I mean, it's a long game, from that perspective. But I think that half of our job is be extremely analytical and extremely, data-led and shrewd and understanding how to negotiate in the market and who's target. And the other half, quite honestly, is being, a quasi-therapist to the founders that we work with, because it's a process you need to kind of guide and walk them through. And sometimes, you need to be able to, take a step back and be like, well, what is the best thing for this individual, for their business, and what they're trying to achieve in terms of life goals as well as professional goals. So I think that having those two kind of skill sets will lead people to be successful in M&A. If you don't have those two, I think that, you can do okay for a while, but ultimately longer term, it will become a struggle. And success rate, which, for us, we track success rate very heavily. Our success rate is about 94.1%. So that's a kind of one of our kind of core metrics in turn we look at, and ultimately it's because we think we are in the business of giving good advice to people.
What is that? Break down that 94%. What are you tracking, and what does that mean? Closing deals for customers, acquiring customers?
So
What is?
we take in our business, of all of the businesses that come to us and get valuations done, which is usually a complimentary service, because one of the things, there's just not a lot of information out there. People will look at the markets and go, oh, well, how am I valued? This company's making no revenue and trading at 40 times. I'm making revenue. Oh, so no profit and trading at 40 times. I'm making revenue and I'm at this. How do I value myself? So a lot of misinformation is out there. So we kind of provide that as a complimentary service, as well as some exit planning. But of those businesses, we only ever take about 1.8% of those businesses to market, in terms of, are we a fit? Are they a fit for market? Are they ready to be marketed? Is the market in a good position in the first place? So of those businesses, very selective. And then that rate tracks, from actually going out and targeting buyers and investors to actually successfully closing. So that's what that 94.1% relates to. And the delta that we typically have between a target and a delta or spread between the target that we set and the kind of final sell price is usually about 5.8%. So our valuation work tends to be very accurate, and we're very good at actually going out and selling companies as well. But these are the kind of things that we track internally. So we'll take businesses to market if we feel we are a very good fit to deliver on that. We are, we're not a speculative shop in the sense of, oh, somebody wants, 50 million or 100 million for their business, it's worth 20, let's give it a shot, because we're wasting everybody's time in those kind of contexts. So again, it's about being honest and transparent with kind of founders as to, what can be achieved. Is now the right time? Can we work with you to, to get you to where you want to be, instead of just, pushing you out to market for the sake.
Right. Well, respecting your time, I want to give you an opportunity to tell people how to make contact with your group, and how to, if there's a listener out there that has a software or a SaaS company, thinking about exiting, how do they reach out to you, Ismael?
No, absolutely. It's just feinternational.com and there's a bunch of contact forms and other things there. And I would say that, we're definitely here to speak to people that, are just curious, I would say, and interested in, the valuation of their business. And we like to think that obviously our service is M&A, but we're also an information business. So, we've, I think, lifetime valued over 23,000 businesses at this stage. So we have a huge amount of data internally that can mean our modeling and everything else there tends to be very, very accurate. So I know there are pitch book and, a lot of expensive subscriptions you can go out and sign up for to get some of this information. But yeah, we like to think that we're a good resource for anybody considering. And one thing I would say to people, in the kind of SaaS digital media and kind of e-commerce space is that companies, so as a data point, companies that we work with from a exit planning perspective before going to market, so I would say at least 6 to 12 months, typically they see an uplift in, exit multiples of about 14% compared to those that don't. So it's always just worth having a conversation. We think it's a good kind of ROI on that. Our doors always open wherever people are in New York, Miami, San Francisco, London, or anywhere else in the world. So feinternational.com, I'd say, is the best way to get in touch.
Ismael, it's been an honor to speak with you, and I thank you for your time. Thank you for giving us perspective on the M&A space, and wishing you all the best as you grow and grow and grow. And when you become the Morgan Stanley of the world, don't forget the little guys, okay?
We are working hard to get there. So thank you. I really, really appreciate having me on and the questions as well. Thank you.
All right. You take care of yourself.